Hello, viewers. This is Martin Gonzalez. My name is Martin Gonzalez, and I am Martin Day Trades. On Trader Mindset today, I have for you guys the difference, okay, between retail traders versus smart money concept traders. What's the difference? So, if you're recently starting out your trading journey, you've probably stumbled upon retail traders explaining their concepts on YouTube or wherever you're looking at to get information to trade the markets. And then there's smart money traders, smart money concept traders, which use tools on the chart different from the tools that retail traders use on the chart. Retail trade, okay. So what I kind of want to say is retail traders trade patterns. A lot of retail traders trade patterns and um, continuation days. Continuation days are usually breakouts. There's no really ever deep discount. And sometimes the retail traders, they don't, the move happens before the market open. So if there's a continuation day, more than likely the high of a day is made during London or early New York session. And that's what happened today. September 6th, 2022, there was a continuation day in the market, bearish. And smart money concept traders use things and use tools, and what they'll say is, I trade high confluence setups. High confluence setups are using multiple tools on like a charting software or website. Like I use tradingview.com, really good. This isn't I'm not getting sponsored or anything, but I do love TradingView. It's what I use to see what other people, hedge funds, institutions, retail, smart money concept traders, what other people who are trading see around the world. So, um, retail traders are more FOMO inclined, fear of missing out, emotional trading. Um, Smart money concept traders trade things like they have a very set they have a very specific set of setups in which they look to trade. I trade the New York reversal, bearish bullish, or I trade the London continuation, bearish bullish, and then there's continuation days, bearish bullish, which I don't trade, and then no trade days, which are essentially for smart money concept continuation days, because the trade took off. There was no weakness, it was just did its thing. So um let's go ahead to the charts, guys, and I kind of want to show you guys what I mean by this. Okay, so let's go to a daily, and what we can see here is that there's this downtrend, right? So let's go down to the hour and do something like this, right? You know, like a trend line, because you know, like channels or trend lines, that's what retail traders trade, right? So we're just gonna draw from like this point to to this point, right? And then we'll draw another one from this point downwards, and who knows exactly where price is gonna stop. There's not really a set like area, right? But then you can go to like support and resistance. Retail traders trade support and resistance. I'm sorry, guys. Um, so they, support and resistance are at levels where it taps. Now you'll see I have blue ones, but those aren't support and resistance zones. Those are just big figure levels. Yes, they gravitate towards those levels, but it's not really ever like calling it support and resistance, just big figure level, because it works in a confluence with other tools that I use in smart money concepts. Now, one of the main differences is when you're a retail trader, when you're buying the breakout, I'm not sure if you guys ever heard of that, buy the breakout. Who's selling to you when you're buying the breakout? You're buying it high. You're waiting for it to break out, which means break out of a certain level. So all of this, right? before it takes off. So see if I get this. Okay. So as price comes down, there's things, institutions. I wonder why there's institutions that smart money concept traders that are buying this dip, and as it gets to, usually a good rule of thumb is every 50 pips, that's 1%. So some traders, if they're risking 1% for that day at 50 pips, they're as soon as price gets to 50 pips, they're moving their stop loss to break even down here while TP's up here. So when price, if price, and people are buying this up here, if this is the breakout level, retail traders are buying this while smart money concept traders are already in a risk-free trade. So if price fails, guess what? Smart money concept traders got out risk-free, while retail traders, they have a stop loss and trading correctly, because if you are trading breakouts, you still need to have a specific stop loss in a strategic spot. Um, Making sure to enter at the most optimal time. But how do you know if you're waiting for a breakout and then all this? You can figure that out. But breakout traders, uh, normally they have good winning trades, but for the days that fail, they get clapped 1%, because you're trying to buy high, and if it just fails, you lost 1% compared to the person who's buying low, the dip, and then as it gets to the high, they're moving their stop loss to their entry, and then if it goes to TP2, 3, 4, then that was a good trade for that day, But the reason why I trade smart money concepts is because I like to move my stop loss to break even for a 0% day. I don't really like to ever lose, because that takes away from the P&L. If you have one winning trade, that means you're able to take 3 losses in the week to be break even. But if you're looking to secure pips, you know, instead of taking those negative 1% days, what if 2 of them were 0% days because you followed your rules? So now you're only down 1%, but you made 3%. After 4 days, you're still up 2%. And who knows what happens on Friday, right? You could take a negative 1% loss, still be up 1%. You could take a 0% loss, be up 2%. Or you can make 2%, be up 4%, 3%, be up 5%. You know how that works, right? So that's just the difference is retail traders are trading patterns, waiting for these bullish buys and all this stuff. But there's a lot of action that's happening in between all this. And yeah, you could trade these right here, breakouts like this. Like there's a bunch of bear flags, I guess you'd call them. So someone could go like this. Oh, there's a bear flag. It's forming. Look at this. If it does this, it's gonna be whatever. But that's not. How do you know? So like, wait for the breakout for it to come in here and then trade out here. Like that doesn't even make sense. It'd be better to buy the highs before the move down. So I'm not even, if I'm trying to break out for the bearish side, I'm not trying to buy low like in this range. What, 11,980 to 11,900? Like I'm trying to buy up here at least at the fib level of 12,053 or 12,025 or even 12,000, right at this level right here. I'm not trying to, you know, this is what would be a continuation. If it came out and then just, that's a continuation day. There was no pullback to a higher level where it had traded into. So I don't trade these patterns for that reason. The same thing with the bullish side. What I do is I look at where the highs and the lows. I do Fibonacci levels. I look for order blocks, and I see where a lot of confluence, like where this order block lines up with the 79% fib. We'll see how London does. It may be a continuation, or it may come up higher during London, and as soon as it, like during New York, as soon as it tips into this area, I'm going to hit the short button and then come down. Where am I planning on going short? I'm probably coming down here to this level, next, the next level, so above the order block, big figure level 800. Okay, I guess you'd call that a support and resistance. So knowing when to knowing when to sell smart money concept, right? You're catching a 1 to 7.63 risk to reward, right? And knowing that this is, I guess you'd call it a support. I don't trade retail, but I just trade bigger figure levels. I just know where my targets are. There's going to be people stepping into the market at 11,800. So it means there's going to be buyers. So if I'm looking to sell, there's going to be buyers up here thinking it's going to be the breakout or whatever, right? And then I'm going to hit sell, make all this, and then as buyers are coming in at this next bigger figure level, I'll just sell to them. So it's about knowing when to enter, knowing when to exit, knowing when to stay out of the market. And a lot of retail traders are FOMOing in because they're drawing all these lines, trend lines, and they don't provide good statistics for the quality of trade setups. Um, People are successful with them, but like I said, when you're trading a breakout, you're buying from smart money. So if if you want to mitigate your risk and save your P&L even just by a little bit, then you have to wait for those good retracements into these higher levels and know a specific area. This is my trade idea for tomorrow, guys, where I'm planning on looking at for an entry. You can see my alert is set. But yeah, guys, I'm gonna push pause here so it might look a little weird. All right, guys. So retail traders have a higher probability of getting rid of their P&L a lot faster than smart money concept traders. And the main reason is, like I said, just breakout trading and emotional trading is going to cause a lot of... See these trend lines? I don't even know what the hell. Just get rid of that shit. Okay. So that's the main difference, guys, right there is, smart money concept traders are using things like order blocks, fair value gaps, time of day, Fibonacci levels, big figure levels, and retail traders are using a lot of just breakouts, patterns, and what happens is they get so stuck in I'm gonna learn it that yeah, you can be successful, but the odds of mitigating risk is a lot more by just buying at smart times. But yeah, guys, this is just for tomorrow. I'm just prepping my charts for the morning. Moved all my stuff, previous day high. Do that right there. Previous day low. Let's bring out this way like this, man. Okay. This is the open right here. So I'm actually just gonna draw these out a little bit more. Okay, guys, that's it. I'm gonna let you guys go and like, comment, subscribe. I'll throw up another video one of these days and get you guys more caught up. If you're a beginner trader, intermediate trader, there's gonna be a lot of information that I'm gonna throw your guys' way. If you've already mastered your skill set, then you probably already did your time and already have your technique, your setups, your trading style, all your setups. But with that being said, guys, like, comment, subscribe, and have a good day.